That's Dimon yesterday. Takes us to Jim's mad dash.
Well, there you have it. You've got a president that is talking about how big things are, not worrying about the deficit. You've got the best banker saying, listen, we should be worried about the deficit. And then we have the analysts. And the analysts, 1, 2, 3, 4, 5, 6, 7 analysts saying, raise price target. This was a great day. So you have...
On JPM.
Yes. So you have these different constituencies. And I think that stock won't be down. I think the stock goes up because the analysts are more powerful than whether Jamie Dimon is negative. I said that he would be morose in my note to subscribers, to club members yesterday, and he was morose. That's what he does. But what people didn't understand is that, holy cow, the bank's doing really well.
The headline in Barron's, I think, was Dimon's tariff warning should have rocked markets, but it didn't.
Right, because we're kind of inured to it. Now, I will say that Home Depot on a conference call said that 50% of their purchases are sourced in the U.S., but they're taking action 12 months from now. No single country outside the U.S. will represent more than 10% of our purchases. They're shifting rather rapidly, changing the global supply chain, hence why they're able to say what the president wished that Walmart said. Very hard for Walmart because it's got a lot of aisles that are not under the jackboot of Home Depot. By the way, Home Depot just said that the do-it-yourselfer is not doing as strongly as the professional. Now, that is very odd. I did not expect that. It is incredible how important this company is to the economy. And you're going to see 6 of our 16 merchandise departments positive comps. Appliances, plumbing, indoor garden, electrical, outdoor garden, and building materials, of which I can tell you once again, outdoor garden is the delta.
This is JPMorgan on the daily chart. And you can see after this huge move higher, price is potentially just pulling back. Now, one way to tell if the momentum has died is if you get a trend line break, which we have. But again, this pullback is definitely warranted because the price is up 34% in roughly 6 to 8 weeks. All right, let's zoom out to the monthly chart to get some perspective on where we are relative to all-time highs, sitting at roughly $280. You have this rally, the basic rally, pull back into what was and still is monthly buyers. We're going to say at $188. And this zone is still valid because it's huge. It's on a monthly time frame. But as you can see, price nearly came down, telling you that they were buyers. Couldn't even dip his toes in the upper portion of the zone before price pulled back up. And then you have a little rally-based rally, another monthly buy level. So if price pulls back, if stock market collapses, it's definitely buying opportunities between about 180 and 160. Let's go to the weekly chart. And you do have this rally, this base. This gap is an extended range green candle. However, it is not valid until price takes out all-time highs. However, just keep this $250 level on your radar. You have that imbalance between buyers and sellers, so we could see price pull back only to see its next impulse move higher. But you can't take that level blindly as price lost momentum to the upside. do have this little rally base drop near all-time highs. And so if price finds itself between a weekly buy level and a daily sell level.